Amit Rathi, Managing Director of Anand Rathi Fin Svcs, joins us from the sidelines of the Anand Rathi Emerging India Conference, which begins today. Hi Amit, good morning. Thank you very much for finding time for us in what should be a very busy day for you. Well, first up, you must have touched base with a lot of people who are coming for the conference. Are there a lot of foreign investors as well in your conference? What's the mood like?
Lata, I think the conference is really focused on the small cap and mid cap space, and I think we've got the entire community of investors who are focused there. So we've got almost 350 investors who are coming to the conference, both public market and a fairly good range of even private equity investors who are looking to do pipe deals in listed companies.
Okay. And what is the mood like? Are there any sector favorites? Is there a disbelief about the index at 8,200, or is there a feeling that you've really not seen it all yet?
I think in the space that we operate in, really the small and mid-cap space, while the index, the Sensex or Nifty is up 30% from its Jan 2008 high, the mid-cap index is still almost just where it is, and the small-cap index is 25% below its peak. And this is despite the small-cap, the BSE small-cap doubling over the last 12 months. So I think still there is a lot of investor appetite, risk sort of appetite remains. We've got almost 3,000 meeting requests in these, in these 2 days. So clearly there is a lot of interest yet.
Okay, Amit, hi, good morning, and thank you again for joining us on the show. I was going through the list of companies that you've invited, and lots of mid-cap pharma companies are coming to your conference. And that's interesting because we had an investor camp a couple of days ago, and most of the questions were related to the pharmaceutical space. What's the sense you're getting about the mid-cap pharma space, and how much potential could be there, and the key contributors to this up move?
I think if you look at the entire small and mid-cap pharma space, we've seen a fair bit of run-up. A lot of stocks are up 3x, 4x, 5x in the last 1 year, and yet there is a lot of investor appetite. I think earnings growth continues to be strong. The domestic formulations business is where there's a lot of interest. I think valuations were very, very cheap a year back. I would say they are probably fair right now. But I think in the defensive space, that's an area compared to relative to technology where we are seeing a lot more investor interest right now.
Okay, let's start with some of the stocks that are finding a lot of favor. The tire stocks, you think there's more to run?
Again, they've done fantastically well in the last 2 or 3 years, and while I won't comment on specific stocks, I think the whole consumer space, the whole consumer-facing industry is something where we're seeing a lot of interest, and we've got a whole new set of investors who are really coming in with into these companies who are taking 5-year views, 6-year views, 7-year views, and this is quasi sort of private equity coming into the public space, and they're really not bothered so much about near-term valuations, which traditionally we've seen mutual funds being very, very cautious about. But these are investors who are coming in and saying, look, I don't mind paying a 20, 30, 40% premium if I can pick up a 5%, 10% in some of these companies, because they're really buying a secular growth story over a 5-7 year period. So that's a whole new breed of investors we've seen coming in very actively into the market now, and that's sort of sustaining valuations for these companies.
You stand on the agro-based companies. Among the other stocks that have run hard and well in the past few months have been the United Phosphoruses, the Tata Chemicals. In that space, is there more headroom? Are there undiscovered stocks there?
Look, unfortunately, I don't track that sector, but I think we are seeing we've seen again a fair amount of run-up, but I won't want to comment specifically on those stocks.
Okay, you do have companies like Insecticides India, etc., that are coming to your conference. What's the outlook as far as that particular sector or segment is concerned?
I think everywhere, if you look at the entire list of companies that we have come to the conference, earnings growth is a common sort of theme across all the companies that are coming. Effectively, if you look at, I would say 80% of the companies we are looking at over a 3 to 4 year period, earnings growing 70, 80, 100% across these set of companies. So really, the common theme across the entire space is really earnings growth. Some of these stocks and sectors have already run up, like I said, but really earnings growth is what we're chasing right now. Okay. And that's common across all these companies.
All right. You've got a lot of construction related companies coming in as well. There's J. Kumar as well. There's people like Ashiana Housing, Kolte Patil. There's a KNR construction. In that space, I mean, construction space, how would you do stock picking? Because that space also has the most beleaguered balance sheets.
I think there are two sets of companies, so you have on one end some companies who are really not stretched on the balance sheet side, some of the EPC companies who don't have BOT sort of exposure. Those are companies that are still doing well. They got 3-4 year order books, ROEs and 20% plus. So those are stocks, and where, sort of earnings is locked in pretty much with the order book. So the next 3 years earnings will grow 70-80%. And stocks are still, I would say, at 8, 10, 12 Ps. So there is enough, I think all these stocks should probably double in the next 12 months. And then you've got some of the real estate link play or the construction plays, where again I think we're coming off really a bottom, and some of these guys who are not really stretched on the balance sheet, there are interesting stories there.
Okay. You are also getting some of the cement makers to your conference, names like JK Cement, etc. While many are hopeful that the new government will accelerate infrastructure investments and then thereby that would help the cement space, things on the ground have not improved as much. What's the sense you're getting about whether the worst is over for the cement sector and hence one should be investing into mid-cap cement?
I agree. I think the short term, there's really, across sectors, there's nothing on the ground yet. But clearly, the mandate for the government and the vision sort of roadmap that's laid out is going to be an investment push, that's going to come in a big way over the next 5-6 years. And cement is clearly going to be a big beneficiary. So, I think one has to look beyond the next 3 months, 6 months, 1 year. And a lot of these companies are trading way below replacement costs. They're trading at 50% below replacement cost, some of these stocks. So I think there is fair amount of upside. Again, one has to take a 3-year view on some of these companies.
All right, Amit, if you won't mention names of stocks, can you mention some index levels? I mean, what do you see by way of the Nifty in, say, by the end of 2014 or even fiscal 2015? Or even for that matter, CNX Midcap if you want to.
March. Yeah, so I think really, while the broader indices, the large cap, we're looking at another 10 to 15% upside in the indices over the next 6 to 7 months. But in the small cap, mid cap spaces where we are seeing a far more interesting play. My sense is by March the index should be maybe 20-25% higher if you look at the BSE small cap. The CNX mid cap maybe about 15% again. But I think the index again does not capture a lot of the moves that are happening because a lot of the sectors have dropped out from the index. Even if you look at the large cap index, for example, if you look at the Sensex or Nifty, we're up last 12 months about 40-45%. But on average, mutual funds have delivered 70-75% return. So there's a lot of action happening outside the index as well. And I think while the index is something that we're all tracking, in client portfolios we're seeing returns that are far greater than the index.
Okay, Amit, we'll take a cue from that. You have a great conference. We are, in fact, talking to a lot of mid-cap companies in the next 1 hour or so. And we hope to hear from you as far as feedback is concerned as well. Thanks so much for joining us. Have a good conference.